If you have been following along with my system and the odds and evens numbers and the 2 bars back strategy to understand that right there, then when you see me opening this chart up at this level, you can understand about where we are. It may be a little bit new to you, but we can still uh, obviously see this right here hit 2 bars back. So that right there is uh, pretty much a good trade signal there, because one puts in a low, one just kind of tries to disrupt it. May have hit the previous high, came back down, giving us a box, right? So we can expect at some point that we will be looking for levels around this box that could play out. So this one came down, hit the previous high, drove it down. That is what helps give this rectangle its move. It's 3 parts. So if we can isolate down these type of functions to what they are actually tied to and what they're in, then we'll be able to understand how and where we can place a trade and stuff like that. We can do like kind numbers, odds and evens. This bar here can be a 2, or it could be a 1 or a 2. It doesn't matter. It could be an odd or an even. The middle bar will be a disruptor bar, right? This is a different math. So these two maths here will work together, because this system right here, this whole bar, is an odd or an even, and then we will skip that bar and then skip this bar here in the middle, and we'll look over here at this last bar here this whole week. This is 1 bar, we skip a bar, and we look back at that level in another week. So when it comes down into this week, we will be looking 2 weeks back. This level came in, and it was on a Wednesday, and we came down here and we put in a low on a Wednesday, and we hit it. So that is a 3 hitting a 3 inside of this larger trade signal that is previous, it's the 2 bars back strategy, skipping the previous week, looking 2 bars back. This day here is 5. We don't have Thursday on the chart. We have Wednesday and Friday. Those are like kind numbers, and they'll bounce off. So when we count some weeks, we can see how this first bar will be 1, and then we'll be able to go through, and then the last bar over here will be 5. What we're going to do is understand that this bar, if we were to keep counting this first bar right here, if we were to keep counting from this week and keep going in sequences of 5, it would be 5, and then this will be 1 through 4. This will be 1 through 4 and 1 through 5, just because it doesn't have the additional time, just because it's the end of the year. But we can understand how this bar here could be bar 6 if we were to count in numbers from here across. We were going counting these 2 weeks consecutive: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we can see how this bar here will be able to potentially react to bar 4 over here. So when we look at it like that, we can understand how this trade over here would be able to happen. So we have this bar over here, which would be, in a perspective, Thursday from a Monday. So we can understand in that count perspective how Monday can react to the level. So this is the 2 bar back strategy, bouncing off of the level from 2 bars back. And then it runs, because it's Monday, it can run towards Monday, an even number, because it's an even number. We could say that, I know these weeks are short and they're missing days, and it can be a little confusing just showing you on this right here, but I'm showing you on this right here because it simplifies it, and it's not making it so scary, if you will. If you look over here on this day, it's 2 bars back that drove it down, and over here we have 2 bars back that drove it back up. So we are reacting to this lower bar down here. So that right there is what we bounced off of, so we could say that this right up here could be the target that this week is wanting. It may not hit it. It might hit it. It may not. But what we do know is that over here, when that level came in, we ran to that opening level of that. Okay, so this is really simple to understand in that form. How we would get inside of here and decide this trade is a little bit different, and how you would want to go through that is just a little bit different as well. So we can use the 2-bar back strategy on the 1 hour time frame down in here, since I've already explained how we would have been able to trade off of this bar 2 bars back from our current bar right here. When we get in here, we have a low of day. We're hitting the level. We're hitting the previous day's little structured level here as well. Broke out, came back down. We're hitting on it. That's why we're kind of having these levels come in right in there. And 2 bars back. So right here, we have we have two bars back from that lower hour there. Let me make it where you can see that pretty good. So this hour, 2 bars back, it made its move, and then whenever we came into this hour that was going to move off of it, it continued it by using the additional 2 bars back trade. Now we go in on a lower time frame, and we're down here at that level. So we are in this bar that's taking off, 2 bars back. We'll make this a different color. And now we would be bouncing off of it, coming over into this bar, which would then be bouncing off of the level 2 bars back. So what I'm trying to show is that this could be an odd or an even, and this can be an odd or an even, whichever it is. If this was an odd, this would be an even, and then this would be an odd bouncing off of the odd level 2 bars back. If this was an even, this candle here would be an odd, and this candle here would be an even, bouncing off of the odd, of the even bar 2 bars back. When it continues up, and you'll do the same type of stuff, you'll need to switch time frames to do this. As you can see here, it did a level, and when we came down here, this bar opened up, it bounced off of 2 bars back. We can keep doing this type of stuff and getting a general idea of when we came into this candle here, that this level here was something to be aware of 2 bars back. Again, we come up here into this next bar, and it's pushing up, and it's dropping back down against this move, and it's bouncing off of 2 bars back. We come over here, we have run back down at 2 bars back. We come over here, and we see this trade. These 2 levels here, this one and this one, are kind of all working off the same thing. So this was 2 bars back, come up, work through the high, close, bounced off of the zone of 2 bars back. We could drop a small fib there for a quick illustration to show what it would be from 2 bars back. If we dropped it down in there, you're talking pulled maybe 50% back. But overall, that's the general move that pushed us up through here. We have a bar here, and we have it 2 bars back. And it's pushing us up towards our higher levels, as the larger signal had already came in down here from 2 bars back, showing that the weekly time frame that this thing could be working on is a huge zone that it could be trying to cross. So you'll be able to understand how you've walked through this from a pretty good perspective. You hit the 3 in this week right here, and this bar 3, and then bar 5 off bar 3. Monday off of this 2 bars back, continuation up. You know, it's pretty interesting. Over here, you have 2 bars back, these lows, and the next day over here failed these. When we come into the lower time frames, we'll have to like toggle our way through this to give you like a perspective of how you can look at this on other time frames. Let's see. Let's try this right here. On the bottom, we're going to have the 15, and on the bottom we got the 15. On the top we have the 5. So when we come down through here in this section, and we've bounced off these levels and started moving, we hit 2 bars back. On the 15, Tesla. Let me fix that real quick. All right. So this right here will be aligning them pretty close. That's fine. So down here on the 15, you'll see that it was doing this stuff on the bottom screen down here. I hate how it's doing it on the top too, but if you focus on the top, you can see it did it right there. If we mark off this level over here, you can see how on the 1 minute time frame you could have probably chased that up through there. Let's go see if we can find it real quick. Let's see what time this is. Okay. It's 1:51. So we've opened up a new 10-minute bar. When we open up a new 10-minute bar, and even if we're on the 1 minute time frame, we can look at 1 minute bars, 2 minute, 3 minute, 4 minute, 5 minute, 10 minute, 15, 20, and then we'll go for like 30 minutes, 45 minutes, and an hour, because we can flip through these and we'll be able to like navigate our ways through how when we want to view something that's not obvious to us, right? So right now it's 1:51. That'll be on a 1 minute time frame. This will be the open of the new. Let me get rid of this bottom screen down here. I don't want to split them anymore. Let's see here. 1 minute time frame. This is the open of the new 10-minute bar. We can view it as in sections of 2 as well. So this is a 1 minute open, a 2 minute open as well. So these 2 bars would say that this would be a 2 minute bar and a new 10-minute bar from what would be 1:50 towards 2 a.m. So if we see this right here as 1 bar, then that means we have to skip 2 bars and look back over here into the perspective of these bars over here, and then count how our 2 bar back function would work. We are opening a new 10-minute bar. We are 2 minutes in, so we're down here not giving us. I mean, yeah, we gave one down here, but we're going to understand how this happened in this gap up and why it meant anything. So we are 1 minute in, 2 minutes in. The second half of our 2 minute bar opened up over here in these levels. So if this is my open, I skip back 2 and ignore them. And now these 2 are my candle zones right here. So we'll get rid of this right here because that was a different time frame, and we'll highlight that one more time. This is 1:50 open. We're going on a 2 minute time frame view on the 1 minute time frame. We're going to do a 2 bar back perspective on the 1 minute time frame, skipping the center bar. So we would say 1, 2, we ignore. These 2 we pay attention to. So where did our trade come? Well, I missed it. So our trade came from in that area there. So now we're back over top of it. If we were looking for 3 minutes, we could do the same thing, but we're not going to go doing all that right now. So we will be able to navigate our way through these as well, probably. I'm just blindly doing this right now, so bear with me. We're going to see how it works. Well, clearly this would be 2 bars back from here. This level in here would be 2 bars back from there. But let's look at, and it doesn't look very clear, but let's look at what time it is. It is 2:03, so this is 2:04. So this right here is a new 2 minute bar. So we would ignore these previous 2 candles, as those 2 minutes would represent the 2 minute bar. And we would look back to these 2 minutes over here. And so we broke out, skipped one, and we found these levels over here to be the levels that will be breaking down in that perspective. So if we look over here, we could say that this did come down and we've hit level, and Obviously, we've hit these levels right here, and those are the levels that we will be looking to trade through for the day, the higher time frame levels and stuff like that. So we have 2 singular minutes back. But what time was it? Well, it's 2:10. Open right here on this candle. So that would mean 1 over, 2 over. So these 2 candles right here, these would represent a 2-minute bar. So we would ignore this one, and we would trade off of this one. Again, 2:10 open, 10-minute bar, 2-minute candles, viewed on the 1-minute time frame. So we would say this will be bar 1, this will be bar 2 of the 2-minute time frame. So we would go to the left, ignore 2 candles because that would make up our 2-minute perspective that we want to ignore, and then look back for the levels in the next 2 candles back. And so if we look at that, we can see that gave us this level. So there we are again. Let me make that larger for you guys so you can see that. I'm sure it's a little bit tougher to see on if you're looking on your cell phone. Again, 10, the 2:10 open. That's a 2-minute time frame. Skip a bar for 2 minutes. Look back at the other 2. There's your signal for this trade off the level. That's why it would look a little more confusing for you. The market moves along. It comes up. What do we have here? This is 236. This is a new. We might be looking at what we have over here. 223. This will be a 10-minute bar coming over. We may be looking at like a 5-minute bar perspective, something like that. I'm just not flipping the time frame right now. I'm trying to stay on the 1 minute to kind of give you the perspective and understand, because I know a lot of you really like the 1 minute time frame. So I'm trying to help you understand how to navigate your 1 minute time frame to where you can, not get chopped up so much. So this is what's causing it. Now, I do not trade every little thing like that. I try to find a really good level and trade off of that. I really prefer the daily levels and stuff like that. And then once I've touched them, I'll start applying these methods and stuff like that to the candles to see if it's giving a reaction that I like, and then giving me some type of good signal sentiment. Like in the beginning of this video, I showed it bouncing off that 2 weeks back low. So 2 bars back, and then running towards that 2 bar back week high right now. That's what we've been doing. So that would be the general thing. So we would only really be wanting to find longs, but just showing you how these things can come about and move around. Let's see, we got 35. So we got 30. We got 25 over here. So let's just go to the 5-minute time frame really quick, just make it easier. If we went to the 10-minute time frame, it may help us out. It didn't really do much. It's just showing how we bounced. This is the time frame here. It's going up, moving down. Just not using that 2 bar back strategy to where you can use it. Here it did, and right here it did on the inside. It didn't give you the peaks unless it did it on like some inside of a 1 minute bar, or trying to do something inside some 15-second bars or some crap like that. But from here, 2 bars back, 5-minute time frame would have gave you a little short, coming down, moving along. You see this level over here, whatever that would be something. Let's go check it out. Well, over here, the hour closed, and then now we're 2 bars over. So there is your higher time frame signal. Here's your other one. We'll walk through that and see how that worked out. You're getting the signals off of these bars. 2 bars back off of level. Trade. Again, we're only looking for longs. You can't really see it too good, but it's right there. We're trying to only look for longs because we believe that it's going to continue on with what it's giving us with the higher time frame signal. So these are all points and times that you could look for entries, trading off of these levels and stuff like that. Oh, that's the 2-minute time frame. I thought it was a 1 minute. It's fine. Let's see here. right here, 2 bars back. There it goes. It almost hit that same level right there. You can probably guess that it could have hit that candle right there because of the little gap that's there. Nonetheless, that's pretty much what's happening. So it's kind of always doing this stuff everywhere in the markets. You just have to like flip time frames and stuff like that and check and see what it may or may not be. All right, here we go. We got a 2 bars back on the 20-minute time frame. Let's see here. Over here, we've got 2 bars back on the 20-minute time frame. Down here, 2 bars back on the 20-minute time frame. So you could see if you go and mark these levels, and it kind of gives you the perspective of what you may be looking for. You can go flip and chart those out and then find these levels. This right here is where you really can find the good trades and stuff like that. So this level right here could have been drove all the way across here for this. You know, if you're looking for little zones and things like that. But this is giving you your pressure zones and why it's doing it. And it's all doing it off of the high time frame triggers and these levels from over to the side here. Low of day trade. So we could pretty much walk our way through every bit of this stuff and then always try to find some type of 2 bars back strategy to where it's getting close to where you want it, you know, wherever you're thinking it's going to move. Obviously, when you open up the chart, you don't know where you're going to open up the chart into this stuff. So you may see that the overall trigger has happened, and then whenever it starts to move, you don't really know what to do because these bars can pull back a lot. But I'm trying to show you how you would walk through these levels, and this is what happens after you get your Wyckoff moves and stuff from over in here, where this would come across, and then you'd be thinking, okay, I'm breaking out above that, landing down in here. This is what's driving your Wyckoff moves. You have to flip through your time frames and then find the continuation bars and stuff like that. You just work your way all the way up towards the top with it, and then that's pretty much it. And now we have a short happening at the top. Whether it continues or not doesn't matter. 2 bars back, 2 bars back. So that's it. My next video, what I plan on doing is just kind of focusing on I might be doing just like some live watching it trade off and then just kind of talk about how that works through. And now that you have seen a little bit of what I'm explaining in the video, and on my previous videos, if you don't understand and this is the first video you're seeing, please go back and watch the other videos. This right here is 2 bars back. We could mark these as red for shorts just to be a visual for some people. So, yeah, that's pretty much it. So, you'll be able to just look through and find these levels and trades like that, and that's what's pretty much causing it. So, yeah, it's a pretty simple system. You don't have to know all kind of abbreviations and stuff, and what we're going to do is we're going to really start digging into it eventually, and then we're going to start highlighting all these higher time frame trades that would have got us in the move in the first place to get us understanding why this trade would have even happened instead of thinking to short the market down, and drop it, drop enough money on that trade and then you could lose half your account. You'll be able to get some more direction as to why you're thinking that the trade may or may not work out. I'll clean the rest of these up later on. But, yeah, again, you got to pay attention to the counts I've given you. You got to pay attention to the levels and how they can work through all this stuff with every other day. This is a level every other day, basically, is what's going on. So you have a day, skip a day, trade the day. Have a day, skip the day, trade. That's what's happening, and that's happening because of the odds and evens, polarities in the market pulling and pushing that price through these time frames. Because if we look at this over here, what is it? Okay. If we went through everything, this right here would be 1. I'm just going to write it out one more time so that you guys can understand how this stuff can work out. 1 through 5 right here. And then we can get 6 through 10 on the next one. And then that's going to help us understand that the market changes, the polarity of the week in itself. And what that means, that should be 10. So, and then once you get that down, I'm going to advance through and help you guys understand something else. That this week over here, although we could say 1 through 5, 1 through 5, and then 1 through what would be 5 if this was a whole week. This one over here will end up being 11 through 15. We're just going to imagine that was a whole week there. And then, so now that would show us that this will be switching from odds to evens to odds. Do you understand what I'm trying to say? The same way that Monday is odd, Tuesday is even, Wednesday is odd, and then Thursday is even, and then Friday is odd. Monday would be odd again, but in some perspectives and layouts, it's an even because we're changing polarities of positive negatives or negative positive, whichever way, it doesn't really matter. It's just counting and keeping up with it. And so this will be an odd week, this will be an even week, this will be an odd week, and that'll help us understand how we may react to and know that this right here could be an odd week. This will be an even week. This will be an odd week, and so then we would be back over here in this candle doing a perspective to where this would be then 16 through what would be 20, and then that would be a even trade. And so we open up an even, we run to the even level. We open up a new weekly level in here, somewhere it's close enough. That's it. So we opened up and we went off of the opposing, the 2 bars back level in the same like kind of number sequence. So it's a way of keeping up with the polarities in the market and stuff like that. So this, I'm hoping that this is getting across to you guys pretty good. We can get into the other stuff as we go, but you really need to understand this. I'm trying to get you a little bit of understanding here of how these weeks will do this, and you don't just this is bigger than just starting this from like the start of the year. So we're not starting this from the start of the year. This is from a different point to get this accuracy. It took a whole lot of work to figure out where to start this sequencing from. It took thousands of hours. So I know what these are right now. I'm just not saying what they are. I'm just telling you the function with this. We're able to survive this from here, from everything I've taught you, with just the functions of what I'm saying with the like kind numbers and the previous, the 2 bars back, skipping the previous candle right connected in the middle there. That can be an inside bar. That can be that it peaked out of the levels. It doesn't really matter. So as this one right here, the week came up here. We touched it, but some may view that as not breaking the week. Some may consider that breaking a level. Whatever, it doesn't matter. You hit a boundary, made a box, hit the box, and coming up. But this right here is how it worked. This is why it worked. And we'll be able to go back through this whole section, and you'll be able to know what these weeks belong to. And then there's a very big group of mathematical equations that are running in the markets that I've came up with, and I found that the markets are running on them and nobody really knows it. And so I've looked everywhere and nobody is talking about this. So I've searched high and low. There's nothing explaining it, and I find it pretty crazy to myself. I don't know. I get caught up in my words a little bit because I have so much to say, and then I'm not saying it. So I'm kind of getting like caught up with that stuff. There's a lot more that I want to say, but I mean, if there's people not understanding what I'm saying here, then if I get into the other part and get more accurate, then you're gonna get really thrown off. So we got to start here and work our way through this stuff. So whenever you just look 2 bars back to look for levels. One, skip one, hit the level. It's all the same. These levels, skip a bar. This level, skip a bar. This level, skip the bar. Bam. So we can do this on anything. Oh, somebody said something about Dogecoin. I don't know if they're still watching, and I'll show you on Dogecoin. It did the exact same thing wherever that was. I don't remember. I guess I passed it on up. Let me go. There it is. So Dogecoin. Boom. Skip the week. 2 bars back. Current week. 2 bars back. This is a Thursday. This is a Thursday. Day 4. Day 4 back over it. 2 bars back. Signal. Hit and traded in the same day. 4 and 4. It's pretty easy. 2 bars back in the low of the day down there. That may be your long signal if you wanted to get in and hold. We come in with this short here, 2 bars back. We shorted that level. We go down, keeping the signal, pushing it back down to this higher time frame signal. From here, we use the 2-hour time frame that just made that clear. If we look at something else, we won't see it like that. It just looks like a previous bar, but it was inside of that previous bar. It doesn't show on the 3-hour, shows on the 2-hour. All right, let's see here. And then we have one levels over here, 2 bars back on the 1-hour. We come over here into this. We got 2 bars back. We could go down on the time frame. Here we are right here. We got 2 bars back. The market's moving now. Doing pretty good. I was in this trade, by the way. That did pretty good. We went up here for bar 2 and bar 4. 2 bars back, and that's why I did that there. Let's see here. Yeah, anyway, I'm not going to go through this whole thing breaking it down like I did. I did a post about it, and I showed all the little points in which you would enter and could enter off of it going long. Because our overall signal, it said we are long. It said we are going long. So that's what everybody started throwing money at it for. It went long off of all kinds of these little signals everywhere. We got 2 bars back, 2 bars back, 2 bars back. Doing it down here, right there. Whoops, did it right there. 2 bars back. Let's see. This candle, 2 bars back. Right here, 2 bars back. So, yeah, I did the post, and I think, I don't remember how far up I ran it through here, but yeah, you can go see the post. You'll look at it. I got pictures on there if you want to. If you'll go look at it. If you don't, you won't. But that's it. 2 bars back, like kind numbers. There's a way to understand. Again, there's a way to understand that this week can be an odd week or an even week. And this is what's responding. So this could be a 1, this could be a 2, this could be a 3. This week could be a 2, this could be a 3, this could be a 4. It doesn't matter. It's the function of it that's making it happen. And the way we keep up with it is different. But yeah, I really don't know how long I'm going to take before I show you the higher time frame stuff on that right there. If you guys aren't understanding this right here, you got to let me know if you're understanding this stuff, because if you're not, there's really no point for me going any farther with it. But I mean, if there's a reason for it, I can do it. It's not a problem to understand how to do this. It's just pretty much, you know, knowing where and how to look for something. There's a way we could have known these levels were going to be a level that this could happen from. The same thing with Bitcoin. Like everybody's freaking out thinking Bitcoin did all this, you know. I did a post on and it called from like 104,447 and 105,784 down to into like 84s or something like that. I forget what it was. But we're bouncing all off these levels and running through here, and that's what's controlled this whole trade for Bitcoin here. If we go over here, let's see. We're going to be looking for odds and evens in here. What day is this right here? We have a Wednesday. Well, this right here is a Monday open. Wednesday hitting Monday. Starting to get up over top of it in the next bar. Moving along. It's not a real hard thing to understand. Over here, we have Saturday. Well, if this is Thursday and it's a 4 and Saturday's a 6, we can understand how like kind of even supported, like kind of numbers with even numbers supported that. Yeah, I mean, we come over here and we go, we're moving, the market's moving, it's already off of the level, we're 2 bars back. 2 bars back. It bounced off of it really clearly. 2 bars back. Boom. Fake out, land on the level, blast off. It's just how it is. It's not really that big of a deal. You have a day candle, skip a day, 2 bars back. What day is this? Tuesday. What day is this? Friday. So this right here is 3 and 5. This is 3 and this is 5. That is like kind numbers. That is a day, skip a day, hit a day. And this day, this bar here. If we come back over here and we played this on this day, looking for this level, we could have been looking down here, and you can see how that level will make a different color. You can see how down here it's a low, skipped it, and hit it. I mean, sorry, this one. Skipped one and hit the 2 bars back. We come into the new day, and we're new day hitting the low, skipping this, hitting 2 bars back. So just to make that clear, one more time, just if I can clear that up for you. I don't know if I said that exactly really great, but in this bar where it goes up and comes down here, we would skip a bar and go 2 bars back for level. So now we hit it, and when the new day comes in, it's landing on the low of the new 2 bars back and moving along for Bitcoin. There's a way that they hide this stuff that, you know, makes it a little bit harder to see as they kind of can whip it around and stuff. But once you start to understand this, there's a low, skip a day, hit the day. That's pretty much it. It's not really hard to understand this. When I get it, I'm really excited to get into my other stuff. It's it's going to be a lot of fun. Um, I'm gonna be getting into like really high counts of weekly bars and stuff like that and combinations and making everything really clear. And I'll start talking. I don't know if you guys have seen my posts on X or not, but I'm gonna start talking about how I called out those trades on X. But I first got to get you guys brought along so that you can understand what's going on. So that's how you'll do it. This is how you look for levels. It's just how it is. Enjoy it. It'll be tough, but once you get it, it'll be rewarding. That's it.